I'm going to tell you about our guest today. She's been on his show multiple times. Becky Swansburg from Stonewood Financial. Becky is not only a financial advisor, not only an expert when it comes to the area of taxation and life insurance, she also is a former Washington insider, having worked in the White House, having worked with senators. I mean, my goodness, you've walked the walk, you've talked the talk. Becky, welcome to the show.
Lived in that swamp. Thank you so much for having me.
It is always a treat. What's funny is the last time we had you on, we had two different candidates. And all of a sudden, the dice have been shaken. The world is in upheaval, or has it been? I don't know. But let's talk about what this potential candidate change could mean for financial advisors, and what should they be keeping their eye on as we head towards the fall.
A couple of things to remember. Obviously, the presidential race is the big hot race. Everybody's watching it. But it's worth remembering that while the president sets the agenda for the nation, it is Congress that actually passes legislation. So in this election, we really, to evaluate its impact on our clients, we have to keep a close eye not just on who ends up in the White House, but who controls the House, who controls the Senate, and how close that margin is. Because quite honestly, presidents can have big grand plans for all sorts of new policies and taxes and reforms. And if they can't get it through Congress, those just wither and die on the vine.
Are there any big congressional races that we should be keeping an eye on?
I think almost every race ends up being a big race, because if you follow, the Cook Political Report or the Hill's, decision headquarters, where they try to predict what are going to be the outcomes and the margins in both House and Senate races. Real Clear Polling does as well. Right now, if you look at the Senate, most people are predicting there's probably a 60 to maybe 66% chance that Republicans are in majority of the Senate. But that majority map looks like maybe a margin of around 51-49, right? These are not big margins. They do control it maybe, but it's very close. On the House side, most people are thinking Republicans do have kind of a better than even chance of getting majority in the House. But again, the models are looking like maybe 219 to 216. So these very close margins. Now, who knows, between now and the election, lots can happen. These numbers have been trending less certainty on Republicans taking the House, and particularly the House, but even the Senate, since Biden dropped out of the race and Harris became the candidate. So we'll still have to see on that, but I think we are going to have very close, most likely margins in the House and Senate, which makes big legislative changes hard to pass through, both things that would be good for our clients and things that would be bad for our clients.
A big one that we've had a lot of conversations about is the TCJA sunsetting.
Yeah.
What do you think happens? Totally, you're totally speculating here. We won't hold you to it, but what do you see happen if Trump wins? What do you see happen if Harris wins?
Yeah. So if Trump wins and we have Republican majorities in the House and Senate, I do think they will get some kind of extension package through. Former President Trump has said very clearly he plans to push for a full extension on the individual income tax bracket rate side to maintain those reductions for all Americans. So they'll push hard with that. I think it would probably behoove Republican majorities in the House and Senate to get some kind of package through. Now, whether that's just an extension of his signature legislation or if they wanted to put something else in place, we'll see. If Harris wins, obviously, she has said that she would like to extend the provisions of the Tax Cuts and Jobs Act, but only for lower and middle class Americans, and of course, pay for those with some new taxes on both businesses, but also higher net worth individuals. So we'll see if the margins want to give her that victory. I think if we have thin Republican margins, it's hard to say, hey, we don't want continued tax cuts for the lower and middle classes in this country.
Yeah.
That's a lot of the people that have elected Republicans too. But that'll be a much harder path forward. And I suspect they might just kind of start something new.
Do you think there'll be a big push? Do you think you'd maybe expect to see a big push on Roth conversions as we go to the final here?
It's a good question. I think what is interesting about that is Harris's plans on capital gains. And if we kind of changed tax rules around how capital gains are treated for a lot of Americans, that gives them incentives to kind of put some of those funds into tax-free vehicles or use them to fund some of these after-tax vehicles to protect them from different taxes elsewhere. So we could see a rush on Roth conversions that way. What's interesting is through the past maybe 8 years, most of the reforms that we saw in Build Back Better and in these other bills that really look to limit Roth conversions, they tend to limit them starting 10 years from now or 8 years from now. And the reason is our government is relying on all that flush of conversion taxes. You're obviously got to pay some tax to convert that money now, and using that to kind of balance some of these proposals, the net impact to the budget. So it's going to be an interesting place for that. I do think that, it's funny, you hear our politicians talk about these wealthy Americans and the ultra rich. And sometimes I tell clients, you might be surprised to know that while you might not think you're that wealthy, your governmental leaders do. And I think the other point on that is that the hard thing in Washington is always to get a new tax or a new change to the tax code in place. Once it's in place, it's very easy to adjust limits. And we actually saw that with Social Security taxation. Social Security did not used to be taxable. In the 80s, it became taxable up to 50% of the benefit. And then it was easy in the 90s to come back and just say, well, now for some people, it's going to be 85% of the benefit. It's like changing the kind of the belts and suspenders around what's going on is much easier than getting that new law into the books.
And fascinating. So what do you think, maybe some strategies or some talking points for financial advisors as we head into the fall?
So obviously the election is a huge environmental topic to leverage for your clients. We've done some testing, and will the 2024 election impact your retirement is one of the top converting email subject lines right now, whether you're doing webinars or just kind of, conversion emails. And I think it's because it's this huge thing that's happening and no one really knows the answer to that. Sometimes I'll say all this political volatility is terrible for America, but it's great for financial advisors because people are lost, they need guidance, and they need help. So we want to leverage the election, but we also need to leverage it without getting too political. And I know some of our listeners are like deep in the heart of Texas and they know what they can say, but for a lot of advisors, you don't want to get too political and risk offending the client or the prospect in front of you. So I do want to say it is absolutely possible to talk about all these risks coming from Washington without getting overly political. So one of the reasons for that, September is actually Legislative Risk Awareness Month. And part of that legislative risk is this risk that Congress changes the rules and those changes negatively impact your retirement approach. The thing that is driving this risk is actually not the election. Whether Republicans or Democrats end up in the White House and on Capitol Hill, it matters. But if your clients just want to be retired for the next 4 years, then this election is where they need to focus. But most of our clients, right, they want to be retired 10, 20, 30, 40 years into the future. And that means that they're trying to manage 10 to 15 election cycles. So the thing that drives risk for our clients is really that every 2 years in America, we have elections. So every 2 years in this country, we have a new government. So as we're framing these topics up for our clients, I think it's important to remind them we're not just planning for what happens in November. We're planning to protect some of your assets against all the Novembers of the future, so that whether you're happy or disappointed after this election, we know it can all change in 2 years, and we need to protect some of your assets from that.
Becky, that is such an absolutely brilliant point, because we do tend to get myopic. We do tend to look just at what's right in front of us. And the approach that you and Stonewood Financial take towards taxation, towards viewing it as a risk category towards someone's portfolio, is brilliant. And in fact, no BS. I was bragging about you guys this morning. No kidding. And I also like what you were saying about that email subject line that's trending really well is the fact that after November, all you have to do is change one word. You can just change from will to how, and you're going to get a lot of attention. Fascinating. Okay, so as a Washington insider, as we'll land this plane here, as a Washington insider, anything that you're watching with particular interest for those for us laymen and women that are out there, what is an insider of the game watching? What do you have your eye on?
Well, I'll tell you, every election, there are two ways that it's going to impact our clients. Short term, like what is this president and this Congress going to pass that impacts our clients? But the place where I tend to look for these kind of inflection point elections is, what does it mean long term? What are today's kind of debates and policies going to mean long term for our nation's finances, for our debt, for our annual deficit, and for our economy? And that's where I think there's a lot of question marks right now. Last fiscal year, our government took in as revenue about $4.4 trillion, and every dollar of that $4.4 trillion was spent on mandatory programs, on things like Social Security, Medicare, Medicaid, interest on the debt. So we are really at this point where the demographics of our country don't give us much flexibility to really reduce spending. So that means taxes have to go up. And, it's interesting, Harris's current plan, if you're familiar, the Penn-Wharton budget model, they take political platforms or proposals and they use their economic models to kind of score what kind of cost it would have. Even all of Harris's new tax proposals to really, tax the rich, still leave us with about a $2 trillion deficit each year from the economic impact. So Medicare, Social Security, these big signature programs are growing even faster than we can tax rich people to pay for them, which I think means that we're going to see more taxes and taxes pushed farther and farther down into the population. That's kind of a given. So the thing that I'm watching most closely is knowing that is coming. Where are those new taxes going to be? Some of them are going to be through income taxes, bracket levels. Some of them are going to be through auxiliary taxes or new faux taxes, kind of like IRMA, technically a fee, but sure feels like a tax. Where are those going to be? And then how are we constantly repositioning client assets to make sure that we're hedged against those risks?
That is you said it earlier, and that is one of the things that is really kind of the beauty of our industry and what we get to do is that all these changes equal opportunity and ways for us to help our clients. And I love, not to be a total fanboy of everything that you do and everything Stonewood Financial does, but your forward-looking view of taxation and as a risk category, and the fact that it is not this election, it's all the elections, and the every 2 year. I just don't think most people remember that from civics class, that's actually every 2 years there's an election. Just fascinating.
I think that is the big opportunity for financial professionals right now, today, is that, we've spent in the past really helping clients understand market risk and then income risk. Income risk was such a huge thing that our industry defined and helped people quantify and help savers address. Now is the time to do that with tax and legislative risk. And if you really want to offer complete advice to your clients, this is the time to talk about it, but also all of the environment that we are in is focusing your clients and prospects' attention on this anyway. So I think helping them navigate completing their retirement approach by addressing kind of this final frontier of retirement risk, which just lives in what's happening for Washington and where taxes are headed.
I love it. I heard a top advisor say that taxation and tax mitigation is the new alpha, and couldn't agree more. Could not agree more. Becky Swansburg, thank you so very much for taking time out of the day to spend with us. For everybody else, don't forget, you can like, subscribe, follow the show. If you have any comments, drop them in the comments. We always check those out. Or if there's an area that you want us to dive into, put it in there and we will investigate. So we'll see you on the other side. Becky, thank you so much.